Okay guys, so here is the copy of the first year income and expenditure test that was given to first year students in the first topic of first year. So question 1 asks you, the following initials are used in income. What do they stand for? Well, we know from our studies the PAYE stands for pay as you earn. And that is a form of income tax. The USC then stands for Universal Social Charge. Oops, there we go. And finally, PRSI stands for Pay Related Social Insurance. They are exceptionally important abbreviations, guys, and you must study them. They are a form of tax that you must pay. They are compulsory, and we know from our study that compulsory tax is also called statutory, as you must do it. Question number 2 then asks you, what is the difference between income and expenditure? We know that income is money coming in, and expenditure is the opposite of this. It's money going out. So income is money coming in, expenditure is money coming out. And simply just give an example for each. So an example for income could be something like wages. An example for expenditure could be anything. Could be bills, holiday, something like that. Okay. So question number 3 asks us, what are the 3 types that we have studied? Well, we know they are regular or fixed. So regular, irregular, and then perks. And again, simply just give an example for each. Regular usually occurs most times. So wages, you would usually get paid a wage. Irregular then seems to be once off, or you can't rely on this income, so like a lottery win. And finally, perks, on top of what the money you earn in your job, something like a company car. So that's how you would answer the first 3 questions, guys. So question number 4 then asks you to group the following forms of income under the correct heading: regular or irregular. So we know from question 3, wages will be regular. Casual work, sometimes you do it, sometimes you don't. Therefore, you cannot rely on it. Therefore, that would be irregular. A lottery win, again, you're not going to win the lotto every single week. Therefore, that must be irregular. Job seekers allowance, you collect every single week. Therefore, you regularly receive job seekers allowance. So that must be regular form of income. A bingo win, you might go to bingo 52 weeks of the year. You might only win it once. You might only win it twice. You cannot rely on winning on bingo every single week. Therefore, that would be irregular. And finally, child benefit, again, you collect every week. So that will be regular. Okay, so question 5 then asks you to complete the following question based on the table below. So 5I says, list the 3 types of regular income above. Well, regular means they receive it often. So can we see 3 types of income that they receive often? Automatically, if we look up there, we see that the salary of Paul, the salary of Margaret, and the child benefit are all incomes that they receive on a regular basis. So it will be Paul plus Margaret's salary and child benefit. OI asks us, list the example of irregular income from above. Well, what have they received once off? we look up here, it would be our lottery win. They don't receive it on a regular basis. So if we continue to go down here, how much is the total income for 4 months? Well, total for July was 1780, total for August 2780, September 2030, October 1780. They have added all that up for you to show you that the total is 8370. So how much is the total for the 4 months? It's simply those figures put together, which is given to you as 8370. And finally, give one reason why Paul's regular income could have rose in September. Well, based on our studies in class, guys, we said reasons why extra income can be received are things like overtime, or a bonus, or extra commission. Let's put com there. Okay? So, based on our studies, we already know that that is true. Question number 6 then says, what are the 3 types of expenditure that we have studied? Well, we know that they are fixed, irregular, and discretionary. Give an example for each. Very important. So an example of a fixed expenditure will be rent, as it's the same amount. Fixed means the same amount every single week, day, month, year. The same amount. Irregular then, up and down, so depending on usage. So it could be phone bills, for example. I said to you already in class that if you are at home on a Saturday or a Sunday, you use your phone a lot more than you would when you're in school. Therefore, the usage of your phone is a lot more. And in the summer, I'm sure that if you had a bill phone, your bill would be a lot higher because you use your phone an awful lot more. And finally, discretionary, which is spending on luxury things. If you look at your needs and your wants, these are more spending on your wants. So fixed and irregular are more to do with your needs that you have to have in your own life, your bills, your rent, your mortgage, etc. But discretionary then them luxury things, such as a football jersey. Or FIFA. Or a new dress. Okay. So, question 7 then says, what is meant by any 5 of the following terms? And please use examples in your answer. So the first one asks you for false economy. This is when it appears cheaper now, but more expensive in the long run. So the example we would have used in class is, if you had 2 bags, one was a £5 and one was a £10, the €5 bag appears cheaper, but if you have to keep replacing it, it eventually becomes more expensive. So a false economy, as I said, it appears cheaper now, but in the long run is more expensive. And guys, it's essential that you use examples. Can't emphasize that enough. Use examples in your answer. It shows the examiner you know what you're talking about. So, impulse buying then. This is spur of the moment buying. So, we're talking about going into the shop for a newspaper and coming out with chocolate, sweets, etc. So it's important that you know that as well. Opportunity cost is the cost of the item you did not buy. So if you have 2 goods, a Mars and a Snickers, you choose the Snickers. Opportunity cost then is your Mars. The cost of the item you didn't buy. So if you choose the Snickers, the opportunity cost is the Mars. Accruals then, pay after you use it. That could be like a phone bill. So you can have a use of your phone bill now and then pay for it later. Capital expenditure, key thing to know, it's long term. So when the government are delivering budgets, they have current and capital expenditure. Capital are like schools, hospitals, etc. Current expenditure is then the day-to-day stuff. So that could be short term. Example, for a government, for example, it could be wages. Or for us, it could be newspaper. Statutory then means compulsory. Remember I said for you to come to school is statutory. And that could be something that comes out of your wages as it's a deduction. So the question said deduction, therefore they're focusing on your wage slip. So a compulsory deduction in your wage slip could be your taxes. PAYE, PRSI, or USC. And you know what they stand for now. And finally, the last question asks you non-statutory. So non-compulsory. That could be VHI, trade union membership, or charity donation. So guys, you see that I have talked you through the whole test. I've also shown you that you must give examples when talking about things in business studies. You know the information, just show the examiner that you know exactly what you are talking about. I hope this has helped you in your revision of this topic and of this test. Thank you for watching.